So this is why I do not think SPY is the best ETF that you can use to buy S&P 500. Hi everyone, this is Pete here. So today I want to talk about what is the best way to invest in the S&P 500. Now, if you are thinking of the very straightforward answer that you're thinking right now, hold your thoughts there. I think you'll be surprised by the end of this video. Let's dive straight into it. So what's the most common method to invest in the US market, especially the S&P 500? It is none other than the SPY, okay, SPY. Now, it's not the, espionage spy, not the CIA one, but this one, right, the Spider S&P 500 ETF Trust, ticker symbol SPY, SPY, okay? So this is one of the most common one. In fact, it's been talked about in many different other YouTube channels. But for me as an investor, I'm always asking this question, right? Is that, yes, what I'm doing now is good, right? Life is good.
Life is good, but it can be better.
But it can be better. So can we find an instrument that is actually better and still serve the purpose? Okay? And this is where we can compare to other forms of S&P 500 ETF. So if you don't know, SPY is actually not the only one. There are actually a few more. So over here, I found on the internet, they did a comparison between these three, okay, which is VOO by Vanguard, okay, and also IVV by iShares, right, together with the S&P SPY. So let's look at how does each of them compare. So straight away, you can see over here, SPY, why is it so popular? Because it is one of the oldest, right? So the most well-known. And in fact, you can see that the number of holdings that they hold are largely similar, 505, 505, 504. Okay, so if you talk about S&P 500, it's actually not 500, okay? It's S&P 505. All right, now, how about in terms of their allocation? You can see that it's also very similar, right? The top 10% holds, top 10 holdings holds about 27% each. Okay, just 28% for IVV. So there's a slight variance between about 1%. So not a big problem. How about asset under management for all three of them? You can see that in this case, actually, while SPY is the most commonly known, the one that has the most fund is actually VOO over here at $760 billion. However, it doesn't mean that we should invest in whatever has the longest date, or does it have the highest number of shares, or does it have the highest net asset value. It is actually what we call the expense ratio, because they are largely similar, right? They are investing in the same thing. So you just want to find the ETF or whichever instrument that can give you the best expense ratio. And expense ratio is basically the fee that you pay to the manager of maintaining this ETF. And you can see over here, this is where S&P 500 wise, SPY is actually not the best, right? Because it's actually 0.09%. Now, while this number is already very small, but if you look at it, VOO and IVV is 3 times better at 0.03%. Okay? So when you compare the universe of ETF, then you will actually reconsider whether you want to shift your investment over to VOO or IVV in this case. Okay? But once again, this is very good, right? We have found better options in the ETF world, but can we find something even better if we venture out of the ETF world? And this is where I want to talk about mutual funds, right? Mutual funds is actually a precursor of what people call it as funds to bring together different stocks before ETF was born. So the precursor to ETF was actually mutual fund. And right now, actually the best way, or I would say the best, but the cheapest way to invest in the S&P 500 is actually back to the mutual fund. Why? Because there is this mutual fund called the Fidelity 500 Index Fund, where its expense ratio, right, wait for it, is only 0.015%. Okay, as compared to the 0.09 SPY. So 0.015 versus 0.09 is a huge difference. Alright? Now, of course, at this case, I think it's also important for us to talk about, like, hey, Pete, if this is so much cheaper, right, why are more people going to SPY? Okay? So there is a reason for it. And that is because SPY is the most liquid of them all, right? So if you are looking for trading, right, short-term in and out, you are doing options, then perhaps you want to pay that 0.09% expense ratio for the liquidity, right? Because that suits your purpose. But if you are just buying and holding, okay, if you just compare to the performance of SPY versus the Fidelity Index Fund, over the last 10 years or so, if you invested $10,000, okay, S&P 500 will return you about 257%, whereas the Fidelity Index Fund that tracks the same thing will have given you 263%. So that is a whopping 6% difference, okay? So if you invest, let's say, $10,000, 6% is $600. And if you invest $100,000, this simple move, this simple strategy, where you just decided to shift your funds, would have saved you or made you more $6,000 US dollars passively, okay? So, a lot of times this is the purpose where I create this channel, is to show you where are all these tricks that you can tweak to improve your investment, okay? So once again, if you like the channel over here, like the content, do like and subscribe. Now, let's come to the summary, right? So Pete, you say that S&P 500 is very liquid, but this is the cheapest, so what should I do? Now, it all depends on your purpose, okay? So if you are the buy and hold type, then I would personally consider going for the Fidelity one, because it is the cheapest expense ratio, okay? But do take note, mutual funds is not widely available in every brokerages out there, right? You need to find the selected brokerage that provides you with mutual funds. So if you like to add mutual funds into your investment portfolio, right, do check out Webull. And especially right now, Webull has a promotion where you can collect up to $150 worth of trading vouchers if you open an account with them and just fulfill the minimum requirement. All right, let's get back to the video. Okay, and then secondly, the most liquid one. So if you are a trader or you're an options investor, then definitely want to look at SPY. Okay, and be willing to pay the 0.09. Okay. Honestly, I think 0.09 is still very good. It's just that if you can squeeze it a bit better, right, then the Fidelity one will be more suitable if you're just buying and hold. However, can we have our cake and eat it? Can we have something more balanced, okay? So if you want something that's pretty balanced with low expense ratio but still, pretty decent liquidity and you can buy it from most platforms, it is actually VOO by Vanguard. The expense ratio here is very good, 0.03. And there's good volume for options, there's good volume for stocks, so liquidity is not an issue. And this one you can generally find on most stock brokerage because it is an ETF itself. Alright, so which one suits you better? Will you use any of these instruments for your S&P 500 investment? Do let me know at the bottom. And if you like the content over here, do like and subscribe, and I'll see you guys next time. Bye bye.